In an era characterized by economic uncertainties and financial challenges unique to their generation, millennials have been grappling with various circumstances such as staggering student loans, escalating housing costs, an ever-evolving job market, and a rapidly changing technological landscape. Amidst these challenges, Bitcoin has emerged as a potential game-changer, offering a glimmer of hope and a path to financial empowerment that resonates perfectly with the values and aspirations of the millennial generation. Welcome to Luxo-Life, your partner towards personal growth and success. This video is the second part of our Bitcoin for Millennials series, and today we're exploring the income-boosting potential of Bitcoin. Often dubbed digital gold and the currency of the future, Bitcoin has captivated the imagination of millennials who are driven by a desire for financial autonomy and the pursuit of unconventional avenues for building wealth. This cryptocurrency, operating on the principles of decentralization, transparency, and financial inclusion, has not only captured the attention of the tech-savvy, but also those who seek a fairer, more equitable financial system. If you're one of those, then watch this video till the end and discover the incredible potential of Bitcoin to boost your income and change your life. So, what are you waiting for? Let's get started. At first glance, Bitcoin may appear to be a speculative venture, perhaps even a gamble. However, delving deeper reveals that it offers millennials a unique opportunity to augment their income and work towards building lasting wealth, even when their initial capital is limited. This remarkable potential for income growth primarily stems from Bitcoin's distinctive characteristics and its capacity to outshine traditional financial assets. What are those characteristics? I'm glad you asked. Number 5. Capital appreciation. The fundamental driver of Bitcoin's income-boosting potential lies in its propensity for appreciation. Unlike conventional investments in stocks, bonds, or real estate, Bitcoin isn't tied to the economic performance of a specific country or the profitability of a particular corporation. Instead, its value is influenced by global supply and demand dynamics, making it a truly global asset. Over the years, Bitcoin has demonstrated an astonishing ability to appreciate in value, often outpacing returns on more traditional investments. Those who took an early leap of faith in Bitcoin witnessed their investments grow exponentially. These instances of substantial capital appreciation have opened the doors to significant financial gains, and this trend has caught the attention of millennials in search of alternative ways to wealth accumulation. Bitcoin's independence from the constraints of a singular economy or company means it is not susceptible to factors like local economic downturns or corporate financial troubles. It operates in a realm that extends beyond geographic borders and the limitations of the traditional financial system. Consequently, it is seen as a versatile asset that can thrive in various global scenarios, positioning it as a strong contender for income generation and wealth building. The cornerstone of Bitcoin's wealth-building appeal lies in its remarkable price appreciation. Early adopters of this revolutionary cryptocurrency has borne witness to astonishing returns on their investments, with some achieving truly life-changing financial outcomes. Its inherent scarcity, capped supply of 21 million coins, and increasing global recognition as a store of value provide a robust foundation for its continued ascent in the years ahead. Number 4. Diversification and long-term growth. In a financial world marked by uncertainty and vulnerability, Bitcoin has risen as an asset that offers both diversification and long-term growth potential. By allocating a portion of their portfolio to Bitcoin, investors can achieve a balanced and resilient investment strategy. Bitcoin is not just another speculative asset, it represents a unique opportunity to enhance the diversification of an investment portfolio. When traditional financial assets, such as stocks and bonds, are subject to market fluctuations, Bitcoin stands out as a versatile addition that can bolster the resilience of an investment strategy. Its low correlation with conventional assets makes it a valuable tool for investors seeking to mitigate risk and pursue substantial long-term growth. Bitcoin is more than a digital curiosity. It's a fundamental piece of the puzzle that is reinventing how investors think about wealth preservation and accumulation in the 21st century. Number 3. Risk mitigation. As Bitcoin tends to behave independently of the traditional market, its value is not directly linked to factors like interest rates, company performance, or geopolitical events. While other influences can certainly cause Bitcoin to fluctuate, such as investor decisions, changing trends, and even tweets, if they still call them that, its value continues to rise more rapidly than other traditional investments. Traditional investment portfolios often include a mix of stocks and bonds. However, these asset classes can be highly correlated with each other, meaning they tend to move in the same direction in response to market events. When economic challenges arise, such as stock market crashes or rising interest rates, both stocks and bonds can suffer simultaneously, potentially eroding portfolio value. Bitcoin, with its distinct market dynamics, serves as a counterweight in such situations. Number 2. A store of value. Bitcoin's reputation as digital gold is further supported by its potential as a store of value. Many investors are drawn to Bitcoin for its ability to preserve wealth and potentially outpace inflation. As central banks around the world engage in monetary stimulus, Bitcoin's capped supply and decentralized nature make it an attractive hedge against currency devaluation. Economic uncertainties are an ever-present factor in today's world. The financial market, intertwined with global economic forces, are subject to unforeseen events, whether they be global pandemics, geopolitical tensions, or unexpected financial crises. In such a climate, traditional investments like stocks and bonds can be remarkably vulnerable, often experiencing substantial value erosion when exposed to unexpected shocks. Bitcoin, on the other hand, is directly affected by consumer trends. The more people want it, the more its value increases. Conversely, when consumer trust and interest dwindle, so does the price and value of Bitcoin. What makes it such a relatively safe store of value is because millennials and the upcoming generations are more and more drawn to Bitcoin because of its promising chance of value accumulation over time. The more people are convinced of Bitcoin's progress, the more likely they are to invest in it. In turn, this phenomenon becomes the driving force for Bitcoin to continue to rise in value and stabilize with time. Number 1. Blockchain technology. At the heart of Bitcoin's exceptional non-correlation with traditional assets lies its foundational technology, blockchain. Blockchain technology is the secret sauce that distinguishes Bitcoin from the financial status quo, enabling it to act as a resilient hedge in the face of economic uncertainties. So how does blockchain work exactly for Bitcoin? Let's start with decentralization. Conventional financial systems handle transactions, record-keeping, and currency issuance through centralized organizations like banks or governments. On the other hand, the blockchain of Bitcoin runs on a decentralized network of computers known as nodes. These nodes work in unison to validate and record transactions, making it nearly impossible for a single entity to manipulate the system. This decentralized structure imbues Bitcoin with independence, allowing it to exist beyond the control of any single government or institution. This simply means that Bitcoin operates freely, disconnected from economic instability caused by government policies, natural disasters, pandemics, and wars. However, this doesn't mean that Bitcoin is untouchable by the effects of these stressors. When bad things happen, people are always affected, and so are their finances. In times of economic uncertainty, people want to pull out their money and keep it close. When this happens, investment markets like Bitcoin and other cryptocurrencies also feel the strain, causing a mass pullout and a massive drop in investment value. We'll talk more about the potential risks of Bitcoin in the next episode of this series, but for now, let's get back to the benefits. Beyond decentralization, blockchain's design ensures transparency and security. Every Bitcoin transaction is recorded on a public ledger known as the blockchain. This ledger is immutable, meaning that once a transaction is confirmed and recorded, it cannot be altered or deleted. This transparency safeguards the integrity of the Bitcoin network, preventing fraud and manipulation. Traditional financial markets, on the other hand, can be opaque. Financial institutions handle transactions behind closed doors, and investors often lack visibility into the inner workings of these systems. The lack of transparency can lead to distrust and market manipulation. Bitcoin's blockchain, by contrast, offers full visibility and auditability. This feature reassures investors that Bitcoin's value is driven by genuine market dynamics and not hidden agendas. Bitcoin's blockchain technology is also responsible for one of its most compelling features: scarcity. We've already told you before that Bitcoin has a fixed supply of 21 million coins, and this scarcity is encoded in the blockchain's rules. Every 10 minutes, new Bitcoins are created through a process called mining, which involves solving complex mathematical puzzles. This rate of issuance is reduced over time, and the total supply of 21 million coins will be reached sometime in the future. Bitcoin's income-boosting potential isn't just a theoretical concept, it represents a tangible opportunity for millennials seeking financial autonomy, wealth building, and long-term financial security. By harnessing Bitcoin's unique characteristics, implementing strategies like dollar-cost averaging, embracing diversification, and leveraging its capabilities as a portfolio hedge, millennials can unlock the financial potential of the digital age. Bitcoin offers more than just an alternative investment avenue. It embodies the spirits of a generation striving for an equitable financial future. In a world characterized by economic challenges and uncertainty, Bitcoin stands as a beacon of hope and a testament to the power of innovation in reshaping the financial landscape for the better. It represents not just an investment, but a paradigm shift, a financial evolution that offers a path to economic independence and the realization of long-held financial aspirations. In the age of Bitcoin, millennials have discovered more than an asset. They've uncovered a vehicle for financial liberation and the promise of a brighter financial future. If you liked this video, please give us a thumbs up and subscribe to the channel for more awesome and educational videos. Stay tuned for the next video in this series by turning on the notification bell. As always, thanks for watching, and we'll see you again next time.